Hey guys, Doug the Retirement Guy here. First, I want to say thanks for all the support you guys are giving us. The subscribers are climbing, the comments are coming in. We really appreciate it, and it looks like you're enjoying these videos. We got an update here of one we did about 3 months ago, and it's called the Curve Yield Premium Strategy Netflix ETF. Netflix has been holding on strong through these tariff issues, and the stock market's dropped for the past 2 months. So we wanted to see how well Curve and this strategy has been holding up and how well they're doing. They're still posting a 22.93% dividend yield. So let's take a look at it today. 2 months ago, we gave this a thumbs up. It was producing, in our numbers, a 20.96 dividend, which were some great numbers. But it was really big here. It was giving us an 18.16% return on our stock value. So it gave us a nice 39.12% total gains. And we said this was a great buy. We felt that this was a strong one to do. And because you're getting not only good dividend payments, but you're also growing your stock value. Now, in the past 2 months, I know the stock market's been bad. We've been looking at it, watching it, talking about it. The S&P 500 is down by 10%. Mostly of it is tech stocks. NASDAQ's down 16%. Again, mostly in that high-level tech stocks. Well, let's give a quick rundown, though, as NFLP, as we said, is Curve's yield premium strategy for Netflix. Its enhanced income strategy is focusing on generating monthly cash flows through diversified multiple source and including harvesting of covered calls, premiums, dividends, interest across the board. They do put quite a bit of money into Netflix to sell covered calls and so on. The distribution, as we said, is 22.93% is what they're reporting. But look at the 30-day SEC yield, 4.81%. Now, the only kicker I have in this whole fund, which you're going to find with a lot of these funds, but is the expense report of 0.99 fees. So it's almost nearly 1%. If we look at the holdings that they're still doing, I'll first off say why we were so excited about a 4% dividend or a 4% return in the SEC. It's all because look at where they strategize themselves. The Treasury bills. You got all the way out to September. They got basically 3 different months where they're set up with Treasury bills that are paying high returns. So we expect that 30-day yield to stay there, and it gives it increased numbers. If you look at what they're doing down below in the Netflix side of it, they're still over $842,000 tied into Netflix that they're constantly turning and turning and turning. So it's a fun way of that they do this, but I think you're seeing it right now is they're really trying to make this thing work. So let's take a look at the return that we're getting off of how it's done over time. Back in January 22nd of 2025, we looked at this and they gave us a report, 8.22% in 1 month, 18% over 3 months, 39% over 6 months, and a year-to-date of 8.2. When we move to March, and this is where we see the big drop-off immediately, is in March, you see that 1 month they're down 4%. Their 3 month is holding at that 3.97%. The 6 month is at 22, and the year-to-date was down to 3.97. So year-to-date, you're almost half the price, 4% down. You're seeing again nearly half in 6 months. So you've seen some drop off in that. But here's the one that's surprised me the most is when we get into April, their 1 month is back up to 2.53. Their 6 month is 5.23. Their year-to-date held on with that 4.3. But 1 year out, they're still up 20.82%. So it tells me that this thing did take the initial hit in March, but it looks like the management team has made their adjustments, made their fine tunes, and are moving forward with getting the returns that we expect. So what we did is we took our calendar and the $10,000 investment into this market, and we just added on to it from what we had before. So when we look at this at a 12-month period, we're basically up to April. We're up 11.48%, which is $1,148. The dividend is still gaining at 23.95% for a total return of 35.44% over the past 12 months. Now, if we dial in this thing from when we purchased it and how we did it, the numbers are still holding across the board. And if you'll take a look in February, we were at $38 a share. We dropped down in March to $34. But now we're gaining back up in April to where we're up 40 cents in that. So again, like I said, the management team has made their adjustments, they fine-tuned it, and they're still cranking out the dividends that we like. So guys, we're taking a look at the return of the investment on the NFLP before March and after March. And we take a look at the dividend, you can actually see it increasing. We were at 24.75%. After March, we're at 25.33%. The stock return, now this is where it's taking a little hit on that now. The stock was up 21.89% before March, and after March, it's still up 11.48%. So basically it's lost that 10% that we see that the S&P 500's lost and NASDAQ's lost, but it still had plenty of room to continue to grow. So our total returns, again, are only down that basically about 10%. So it shows that NFLP is basically ahead of the market. It's able to control and restructure itself to stay ahead and continue to produce. Now here's what we did here is we put this into a time chart so you can really see what we're talking about. Before March, the average price was $33.03 with the current cost today of $34.64. So it's up 4.8% over its average cost. And so you can see in March, it was starting to climb. It was starting to take off. Now we expect this in the next period that we'll see it drop off. And what we actually saw this is plateau. So when we look at this right here, you can see the plateau that it's done. It dropped. So to compare the two pictures, you see the line going up. The line going up, it comes back down as a second mountain, but it plateaued at a higher level. And so the month of April, we're holding at a higher level. That's why we come back and see over the period of time, the average price is $33.61. So the average is actually climbing, and $34.64 is the current price tag. So it's up 3% over the average. So as the longer we go, the average will either slowly go up or down, and then we can compare it to the price. So this thing is right in the ballpark of holding its own over 12 months. And when we add into the next side, we're going over 13, 14 months, and it's still holding strong. So guys, let's go over to the NFLP summary. The stock return over the past 12 months is 21.89%. That's definitely a thumbs up. The dividend return of 24.75 or $7.73 over 12 months, definitely a thumbs up. And the stock return of 46.64%, including dividends, man, of course, 3 thumbs up, you can't beat that. But the question is the review. How has it done over the past 14 months? They're still holding 11.48% growth in their stock fund. So man, we still keep that thing that thumbs up. Their dividend, which I think is one that gets me the most excited, is that it's up to 25.31 now, or $7.91. So it's about a 20-cent gain when we look at this over the same period of time. And then it gives us a total return of 36.81%. This is a Netflix ETF that has done it right. This is one that is just marketing right. They took their hits in March, they made their adjustments, and they've come back. As Netflix has continued to grow, these guys are continuing to grow. Not all ETFs are built the same, and not all ETFs are operating the same. So this one here gives us our full thumbs up, and we give that the next answer to you. Is this good for a retirement account? And the answer is a definite yes. You would like to have this. I wouldn't put all my money into this fund, but definitely is a fund that I would have some money into that's creating some good, decent dividends and producing some good cash earnings for us, because they are one that pays monthly. We put this as a moderate buy. You're not getting a deal. You're not getting a steal. You're not getting anything special other than a stock that has the potential of continuously moving up the food chain and growing over the next 12 to 24 months. Your dividend rate, 25.31, that has grown. Your NAV side of it, it's up 11.48. Even in troubled times, you are still growing your value. This is why we really put this as a yes, that you want to have in your retirement fund. Guys, this is Doug, the retirement guy. If you like what you're seeing, man, just click that like button. Helps the channel. Best of all, though, don't miss any of our videos. Hit the subscribe button. If you're not a member, we welcome you to the channel. If you are, we thank you for your support. And most of all, we are always open. Leave your comments down below. Tell us what you like or dislike. You may not like this one. You may love this one. Put it down below. Let us know. Or if you have anything else we want to review for you, we're more than happy to listen to you, and we'll do what you ask us to do. Everything helps the channel grow, and that's what we're here for, to give you as much information in these troubled times and in the stock market to help you in retirement. Again, this is Doug, the retirement guy, and thanks for watching.